Well, these companies that have kind of done some big investments into the clean energy stuff, then they have to go, okay, well, now we've done all that. We have to make that work. And so it can kind of create a little bit of an economic fumble or trimmer. And a little bit of that, I believe we're seeing a little bit of that right now. Hey, it's Josh with Tax.pro, an EA with over 20 years experience in taxation. I'm glad you're here. Great news. We're going to continue last week's episode with Jackson and I. Here we go. Most of the things with the OBBBA for businesses are just making permanent TCJA. So TCJA is Tax Cuts and Jobs Act, which passed in December of 2017. That's when that became law. What happens is Congress only has a certain amount of money they can spend. I know that sounds crazy, but it's true.
Do they follow that rule?
Well, sort of. They have to work around it. So they say, okay, well, we can spend, X number. This bill can cost X number of dollars.
Yeah.
So they sunset a lot of the tax bills, meaning that they end after a certain period of time. Well, most of the TCJA ended in 2025. So then that's when we get the OBBBA. The OBBBA is to extend or make permanent a lot of those provisions. So they couldn't make them permanent back in 17 because it would have broken the bank. But then actually now that they did it a few years and they got some numbers around it, they're like, okay, well, if we change these few minor details, then we're good to go. So in that, some of the things that are great are obviously QBID, qualified business income deduction. That's a huge one, right? 20% of your business net profit is deducted from your taxable income, assuming you qualify. Another one, obviously, is going to be depreciation. So like 100% expensing of equipment. Of course, there's limits around other different assets like vehicles and houses and real property and that kind of stuff. But yeah, I mean, that's another one that's really great. And another one that's really great is cost seg. So like if you're doing real property, commercial or residential, and then you can do a cost seg study on that. It allows you to deduct portions of that property quicker. Other ones like research and development. So a lot of the R&D stuff went away, and they brought some of that back with the OBBBA, which is not most, it's not most businesses, but it definitely will impact a handful of them. What's funny economically about it, and this is just like, I feel like we're a little bit like Dr. Jekyll and Mr. Hyde on this. It's a little bit nuts, and because here's the thing. On the one hand, we gear up because we pass these bills around clean energy. So economically, companies then make moves to utilize those things within our tax law and within our economics.
Right, because they want to be as efficient as they can.
Absolutely.
Yeah, makes sense.
And so they kind of start a journey, and then what ends up happening is then we get a big bill like this where they rip out everything clean energy, and they say, nah, we're not doing clean energy. Forget that, right? So they rip all that out. Well, these companies that have kind of done some big investments into the clean energy stuff, then they have to go, okay, well, now we've done all that. We have to make that work. And so it can kind of create a little bit of an economic fumble or trimmer. And a little bit of that, I believe we're seeing a little bit of that right now. So I kind of wish it was a little bit more in the middle. I mean, I'm not a green energy guy by any means. As a matter of fact, I'm much more of a nuclear energy because I think it's the best type of energy. But when we're talking economics, if we've already started down a path, maybe a little bit of a slower change would be smart. And I would love to see them incentivize manufacturing more like this. This is one of the things I really wish they would do. Let's say you're starting a manufacturing company and you gross less than 50 million. Why don't they say, we're going to cover, the U.S. government, to incentivize that, is going to cover the FICA taxes for your employees for the first 5 years. And so that's going to end up being a significant tax savings to these companies. We're going to bring back more manufacturing and have more job opportunities. And it's in those smaller businesses that we're doing this. I think it would really help boost our economy because it's the small companies that are doing the hiring and that provide the jobs, not the large companies.
Right.
So large companies, they're like this. We didn't make any money this last quarter. We're going to make sure next quarter is profitable. 10,000 of you don't have a job anymore. And we don't care. No small business does that.
No, not at all.
So economically, like I wish that we would think through some of the
Decision
policies.
making.
Yeah. And maybe not quite so just black and white. There's probably a middle there that's smart economically, and you account for these companies that have thrown a bunch of money in it and that are not just a little bit hung out to dry right now. A lot of the stuff that they throw money into, they didn't get to see the end result, and now they have problems. Whether it's supply chain because of tariffs, whether it's energy efficient stuff that they started but they didn't finish, and so they lose a lot of those credits. It becomes a little bit of an economic mess.
Yeah. So it's tax season, right? Coming up.
Tax season. This is January, February, March.
Big deal. What are some things that can help our clients as far as tax season coming around? What do they need to do? How can they get connected with the tax advisor? How do they know they need a tax advisor? What are some things to look out for?
If you're making over $150,000 a year in household income, you should not be using anything that comes from a box to do your taxes. You should not be using anything that is an AI bot to do your taxes. You need a real human. You shouldn't use anybody that is not in America.
You're saying we shouldn't use chat? Are you sure?
Or we should be careful outsourcing our tax information overseas. Like we don't do that. We keep all of your tax information right here. Those are things that I would definitely say to be aware of in 2026. For most individuals, there's a lot of change in 2026. So tax planning is going to become important, understanding how your taxes are going to change and what those effects are going to be. One thing I'm not sure if how this is going to shake out. I have a sneaking suspicion that if there is a tariff kickback, we've had this happen before. It started years ago. The first one that I worked on was the telephone credit, which was where America basically taxed telephone companies too much. And so then they had to issue a credit back to all Americans, but you had to file your tax return to get the credit.
So in this case, how would that work with tariffs?
I'm getting there.
Okay, sorry.
So then fast forward to 2008 when we had the housing crash, we kind of had this stimulus thing. It was the same thing. Influx of people filing returns. We didn't have a lot of people filing returns. We had this huge influx of people filing returns because you had to file a tax return even if you only received Social Security to get your stimulus payment. I think we're going to see something very similar. We saw it again in around 2020 with COVID. If you didn't file a tax return, you didn't get your money. So I think we're going to see the same thing very likely with tariffs. You've got to file a tax return to get a tariff credit. Will there be one? I don't know. But my guess is that's going to be one of the stipulations, even for people that may not be necessary for them to file. They probably need to consider filing a return in the event that they do some kind of a tariff rebate. Yeah, it's going to be interesting to see how that plays out on the filing side. If you're in a situation where you're doing itemized deductions, you should use a tax pro. If you have a business, you have a rental property, you have a farm, you fly airplanes, you probably shouldn't be doing your own taxes. This is what people don't understand. Just like the rest of the world that's like starting to use AI.
Oh, we're seeing it a lot.
IRS is starting to use AI. And guess what they're going to do? They're going to use AI to make sure that your tax returns are accurate.
And are compliant.
And if they're not, then you're going to get an audit. And correspondence audit's probably what it's going to look like because they're the worst. With a correspondence audit, you are not working with an individual with the IRS. You are actually working with a department. So if you can imagine, a department is auditing your records. You can never talk to a single person. There is no single wringable neck. And I've represented several of these. Always the default answer is no. Here's my receipt. Sorry, not deductible. Here's my charitable contribution. Sorry, not deductible. They allow nothing because they think you're going to just roll over and pay the tax. So you have to then file. You have to keep responding. Eventually you can get it to an appellate officer. If you know what you're doing, then you can talk to the appellate officer and you can generally get them to accept those deductions. But if you don't know what you're doing and you don't even understand what I just said, you should definitely not be doing your own taxes because you don't understand what's on the return, what deductions you took, and the cost of those deductions. Danger, Will Robinson. Not smart. So yeah, I mean, if we just said big buckets, $150,000 of more of income, hire a tax pro. Just spend the money. It's worth it. Business, rental, farm, hire a tax pro. Itemized deductions, hire a tax pro. Any of those people should not be doing the return on their own.
I totally agree with you. You had actually mentioned to me today, you were walking by where we were working. If you make over $100,000, you're in the top. What did you said this to me?
So I just said only 18% of Americans make $100,000 or more.
Okay,
only
of Americans. Okay,
right.
So we're talking, if you're in that 18%, just hire an advisor, tax advisor.
Yes.
I mean, come on.
That's right.
It's not that big of a deal, and it's going to save you way more than you would be paying in penalties alone, I'm sure.
So your time. So there's a
Yes.
time factor here that we're ignoring, and that is if you do your own return, it's going to take you more time. If you need to
That's a great
research
point.
something, you're going to spend more time on it. You could be spending that time making more money.
Yeah, your time's more valuable at that point if you're in the top 18% of Americans.
It's smart to hire somebody that's going to advise you and say, hey, let's do this and this and this, or what is your total financial picture? So one of our core values is whole life focus. And a lot of people, say, well, shouldn't it be work-life balance? And I'm like, heck no, because that's not the point.
No.
What we're talking about is we don't do what's necessarily the most important for you today.
But
We don't do what
Yeah.
feels good.
Right.
We look out into the future and we say,
The long run.
what is the whole life
That's right.
focus and what does it need to be? And let's make decisions from that lens, not from what feels good today versus what feels good later. Don't sacrifice what feels good later for what feels good today. Don't find yourself in jail. Here's what's crazy about this. Like, most people would assume that you're never going to federal prison if you commit tax fraud. Believe it or not, one of our team members' neighbor, they lived 2 doors down, went to federal prison for a year because they were doing illegal things with their taxes.
Yeah.
Like, this actually happens in America. I'll give you another one. I'm going to dispel something that everybody gets wrong with taxes. Everybody believes that if you owe money to the federal government, straight to jail, right? You're going to jail. That's what they believe. It's not true. It's not true. You can't go to jail for owing tax in America.
Right.
You can go to jail for not filing a tax return. I know that's shocking, but that's reality.
So you're saying that we've got to file for tax returns, that you're not just going to go to jail for not paying, but you've got to file your tax return.
Filing is the key. Even if you owe money and you can't pay, you still want to file the
And I
return.
think that's so important for our listeners to understand that.
Yeah, because if you owe, let's say, and surely you're not in this position, but you get your return done and you owe $500,000. If you do that, if you owe $500,000, you better have made some serious money and you should have a tax pro. And if you owe that much money and you don't have a plan, shame on you, right? Christmas is always on December 25th, right? Every single year.
Every year.
July
Plan
4th.
for it. Make a
every
plan.
July 4th, you're going to spend money on fireworks. The point I'm trying to make is taxes are due April 15th.
Yeah.
You should have a plan. If you make the money, save the money to pay the tax.
Yeah.
And then when you file the return, pay the tax. If you don't have the money, let's say you got to that point and something happened and you don't have the money, still file the return, but then you can jump into an installment agreement. There's other options.
For sure.
But don't just ignore it and not file. A lot of people just go, I'm just not filing a return. That is not a good plan.
It's dangerous. Very dangerous.
Unlock the power of full-service payroll with Payority. What is full-service payroll? It's the ultimate hassle-free solution for managing your business's payroll needs. With full-service payroll, every aspect of payroll processing is handled for you, from calculating wages and taxes to filing compliance reports and ensuring timely payments. You get peace of mind while saving time and resources. Why Payority's full-service payroll stands out. Complete payroll management. We handle everything: wage calculations, tax withholdings, direct deposits, and more. Compliance made easy. Stay worry-free with expert handling of federal, state, and local tax regulations. Employee self-service. Empower your team with easy access to pay stubs and tax forms through our secure portal. Dedicated support. Our payroll experts are with you every step of the way, ensuring accuracy and reliability. Ready to simplify your payroll? Visit Payority.com to learn how our full-service payroll solutions can transform your business.
Are there any cases, or do you know anything about sports, NBA players, MLB players who didn't file tax returns? I don't know if you have had.
Yeah, no, there are definitely, there's some of that.
Even actors. I don't know.
There are definitely cases out there. One of the things, actually, I had pulled this up. Accounting Today. IRS CI, Crimes Investigation Unit, uncovers $10.6 billion in financial crimes.
$10.6 billion?
$10.6 billion with a B, billion. So this article talks about
That's insane.
it. And there's actually a report. Let me pull it up. Because you can just, this is readily available. All right. So the CI put out this 2025 annual report. This just happened.
Just came
And
out. Okay.
It did. Yeah, it just came out. And you can go through and read. What's cool about it is it gives you a lot of like fascinating points. For example, the snapshot. This is direct investigative time spent. So we're just talking about the time of what they investigated. And CI is bad. So when you hear of guys with guns in IRS, that's these guys. Like they're the ones that they
like
show
in the
up
movie,
with the guns.
You see the yeah.
Well, they don't make movies of IRS agents,
no,
but if they did,
I mean, in your mind, you're
thinking
of the
Stranger Than
stereotype.
Fiction
It's
is like the only movie of an IRS agent that I'm aware of. All right, so they spent 11.2% of their hours focused on narcotics. 1.8 was uncategorized.
wow.
63.3 was spent on tax. 63% of their time. 23%, almost 24, was non-tax issues. And then this was what I love, because this is, for you people out there that don't understand this is going to blow your mind. Investigation sources. This is what people don't understand. And I say this stuff to clients, and they don't get it. 4% of investigation sources came from state and local government. 6% came from the public. Jackson going, hey, whistleblower, he's not paying his tax. 3% was IRS civil. 29% was U.S. Attorney's Office. When you go in and you're under oath and you talk about how you defrauded the government, maybe unknowingly, 19% came from CI themselves. 12% came from FinCEN data, which is like the federal, where you report if you have a foreign bank account. And then 27% came from federal agencies. Yeah. So those are some fascinating numbers. Tax fraud identified was 4.49 billion. 6.1 billion was other identified financial crimes. There were 1,445 warrants executed. 2,043 referred for prosecution. This is referrals. Wow. 89%, this one's very painful. Straight to jail. 89% conviction rate. Federal crimes. You're going to prison to serve the sentence.
Wow.
1,611 convictions and 2.35 petabytes of digital data. Is that right? Did I say that right? Petabyte?
Petabyte. You're writing off the percentages. Those are percentages of how they find.
Hopefully you're still awake. Yes.
The public. So why? That's funny. How wake up. Why is that interesting to you?
Well, it tells you a lot. It tells you like where these people are getting in trouble, how they're getting found out.
Yeah. So dive into that.
Yeah. So if you're in court and you're under oath and you admit to committing a crime because you might say something like, they're talking about your taxes, like you're getting divorced, and they're talking about your taxes, and you admit to a federal crime under oath, guess what? Whoopsie. Now so we have a problem.
Yeah.
If your neighbor is like, or somebody that was working for you is like, a little bit suspect, whistleblow, there's rewards a lot of times for those people. They get a portion of the recovery.
Okay.
So they're gonna be like, hey, so-and-so business owner is not reporting cash. This actually happened locally. So let's talk about this one. Several years ago, there was a local pizzeria.
Yes.
I love my pizzeria. It's a local pizzeria.
Pizza. Yes.
And the owner was skimming a little off the top. He wasn't reporting all of his cash. He was just, there was like the cash register drawer, and then there's maybe the shoebox under the drawer. And he'd be just like putting it in the shoebox and not reporting his income. And he thought, I'm above the law. It won't matter, right? Until. That's a terrible knock sound.
Well,
knock. Yeah.
I don't know if that's better. It's pretty.
So what ends up happening is he gets audited. And there's this thing, this is how they catch these people. There's this thing called an economic audit, and there's a cash-intensive business economic audit. What they do is they go and they say, oh, well, the average pizzeria, when we know their cost per pizza based on their sales, because they're a legitimate business. We've audited them with an economic audit.
Right.
No questions.
Across. This is probably like local pizzerias across.
Could be
Maine.
It could be a huge, not the world, but it could
America,
be a huge area.
Right. Yeah, that
huge
state
area.
maybe. Yeah.
Well, there's the whole U.S. and then they go regionally.
Regionally, okay, gotcha.
So they could be like, in this region, we know that it cost X. So they go look at how much flour the dude bought. They go look at how much water, his utility bills, how much water he consumed.
Yikes.
They go look at how much pizza sauce he bought.
Danger. Yeah.
And they can tell by what he's reporting in expenses what his income should have been based on based on national averages or even regional averages.
They can see these fibbing.
They know this stuff.
They know.
They know.
Yeah.
The
Yeah.
freaking IRS knows.
Yeah.
They're very smart. Do not think they're dumb. They're very intelligent. They go and they do the math and they're like, hey, buddy, it's hundreds of thousands of dollars that you've not reported in income. And we know based on how much you've paid your suppliers. And so that's what these guys with guns do. So different ones, there was an investigation actually, believe it or not, against TD Bank investigation. It was a big one. For almost 10 years, they went after them. And so in this report, it talks about all the specifics. I believe this one was one that had to do with the FinCEN issue. A lot of them are foreign. Some of them are like Bitcoin stuff. People are dealing with Bitcoin and not reporting their income.
Do you think this just proves more to how the IRS using AI, and that will help them find those that are not following the rules
Absolutely.
or following guidelines?
Because it's so much for a person.
Yeah.
It takes so much even for a team
Yeah.
to police all of these companies. Yeah. But you throw it into AI and you go, hey, these are the national averages. And then they get a Schedule C or a S Corp or a partnership or a trust. And they're like,
or all those things together.
That's weird. Their gross is this, but their flour purchases are that.
The math is not adding up. Something's going on.
It's not mathing.
Yeah.
We're going to automatically flag them for an audit.
Wow.
We're going to go look at their business, and we're going to see if they're reporting their income or not.
Wow.
Buyer beware.
It's fascinating.
Yeah. So this is why you want a tax pro, somebody that's keeping up with this stuff, that actually knows what the flip they're doing and talking about. And we have internally, we actually have these numbers that we look at, and we see those trends early on. And we put out a quarterly report where we're talking about what's going on in the small business world based on several hundred businesses that we're looking at their financials.
Yeah, and I think that can help business owners see, okay, this is what's going on. Okay, so I probably need to increase my price or whatever according to that report that you're.
And we've done this for a long time, and there's trends within that report that are crazy. Like, for example, early on in COVID, I could see really early on that cost increase were substantial. This is before any of the big guys. We could see this. And so I started putting out content to our businesses and our clients, and I was like, hey guys, this is happening. You need to watch your pricing. You've got to raise your prices because you're not going to make it if you don't, because your cost has gone up exponentially based on the data that we have
They're not
over
going to
the
be able
years.
to sustain. Yeah.
Yeah. And so they did. They were able to ebb, move, make those changes. And so we have that data, and we provide it the best we can to advise our clients. And it's powerful.
So with this in mind, obviously the IRS knows what they're doing. It's not like they're the first time. It's not like they just got out of college. They've never done this before. Obviously.
They know what they're doing.
They know what they're doing.
Yes.
They've got the stats and everything. So with this, business owners going into the next year, what are some things that business owners can do to prepare for keeping up with their taxes? How can they figure out that number? What are some things that they can do to know how much they need to set aside? What does that look like?
I can't speak to how everybody does it. I know how we do it. So if they partner with us, then we're going to run their numbers every single month, and then we're going to issue a report quarterly. And that quarterly report is their tax report, and it's going to tell them what they should expect based on the projections of their business and how their business is trending. And we actually run it out. So we redo this every single quarter, and we give them that report. And then they go, oh, okay, I need to adjust my quarterly estimates by this or that, or I need to do this or that to ensure that I'm on track as far as taxes go. I mean, that's the simple answer. If they're not using a tax pro, they're not using an accountant that's doing that kind of work, then I would say you're in the wrong place. Like, you've got to find somebody that's helping you with it. This is not something you're going to get from AI at this point. It's not there. And so, yeah, you got to have a plan. Thanks so much for watching today. Be sure to like and subscribe to our channel. Don't forget to hit the little notifications. Man, we are glad you're here, and we're excited to help you with your small business or your family's finances, whatever it is you need.